SwissBorg is the official partner of my channel where you can buy, sell, hold, and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Hello everybody, welcome back to Rex City. Let's have a look at Bitcoin and think about what's going to happen today as we are having the CPI data come through. Oh bloody hell, yeah, yet another situation to take place that impacts the chart. So yeah, the CPI, as long as it's at or better than expected, markets might respond favorably to that. But if it's not, which it might not be, to be fair with you, because you and me, we've all been trading oil on this channel now for the best part of almost 3 months now, and we've expected oil to increase in value with a target of around about 104, with the potential of it breaking out from that level and going on to make a new all-time high, which is crazy to think, but it's true. So we've tracked oil, and we know that over the last couple of months it's moved from 73 to what was 93, so a $20 increase. That's food and fuel right there. CPI data is usually about 6 weeks behind the what's going on right today, and so over the last 6 weeks we know that oil's gone up. We know that that's going to impact CPI. The core CPI has been a bit of a problem these last 2 reads in a row. If that continues to be up and now oil's gone up, which is going to impact food and fuel, might not be a favorable scenario, but we'll have to wait and see what it looks like. Maybe they'll cook the books because it's election time. So we'll see. But when we focus on the chart specifically, if we take all this noise off the chart and we have a look at this, we might be okay in thinking that fair enough, we're doing exactly what we did last time. From the peak to the low, we move about 80, into the mid 80s. So we're talking about between 12 to maybe as a dip in our toes below 10. That's all fine, but when we turn on the indicators, turn on the charts, we've been in a bit of a delicate situation for a long time, since we lost the 20 weekly really, and we were looking to flip bullish on this one. If we were to reclaim that 20 weekly, this would have been a really good scenario for Bitcoin to have reclaimed that 20 weekly as it had done in the previous bear market end. There was a possibility that what we had done has already capitulated, and we were looking for an accumulation. And just like what we saw last bear market end, this is where I bought in. I bought in once we'd reclaimed these moving averages, and it seemed like a reasonable area to do it. So, I was toying with that possibility, to be honest with you. But as we started to break down, and on the shorter term time frames, we were looking for a trend to form. And that's why I was saying, get ready to buy the dip on this one, because a trend appeared to be forming up, down, up, and then we were saying, right, we got either the 10 exponential, the 21 or the 20, or this box. And if we lose this box, it's a big problem. And so, man of my word, I did try and buy the dip, buy into that box, and the box worked out for a short period of time, and I felt like a hero until, boom, bow, schmow, bang, dead. Absolutely dead. So that dip didn't work. The dip kept on dipping, and so now what we're looking for is probably most likely going to be a continuation down to the 12,000s, dipping our toes below the 12,000s. We're back into this box, this resistance box again. I suppose when you break out of a box which is, I will call it, more than 70% of the way through. This is, I suppose, not a box, it's a descending triangle, but 70% of the way through or more, and it can lead to fake outs, and obviously we've got that. But let's not put too much weight on the chart. We know that FTX has done this, and the problem with that is that FTX was such a large exchange. Luckily, I never traded it. I'm a Binance, mostly Binance spot trader, a bit of KuCoin, bit of Gate.io, and my hodl bags that are staking are mostly going to be in places like crypto.com and Coinbase and SwissBorg. This is why when I made the video about buy, hold and stake, they never involved FTX. Never involved FTX, because I can't vouch for it. I've never used it. So yeah, those are the exchanges that I use. And I don't know about Binance, but I'd be amazed if they actually had an issue like this, but you can't rule it out. But the ones that I'm more confident in are SwissBorg, because I know their situation is not in any way like any of the others. And Coinbase, I would be very surprised to see them have an issue in the same way, because these are the ones that are towing the line with regulation, and that's the sort of things you want to look for, which is also why when I made the video about the altcoins that I'd be looking to buy, in the summer, when I was talking about whenever we capitulate, these are the things that are on my radar. For the most part, what part of the criteria that I look for is, have they been regulated? Are they towing the line, or are they trying to make as much money through token sales or whatever as possible? Don't want to get stung further down the line. And it's these sort of scenarios that we're seeing now unfolding, which obviously I would like to try and avoid when I buy and hold for the long term, buy, hold, stake. So the platforms I've chosen, the coins that I've highlighted, have all of this thought about in advance, because these are the sort of things we want to avoid, completely avoid. Anyway, that's maybe that's for another video I'll do again, because I appreciate the summer was a long time ago now, as we're in mid-November. People may not have even watched that video, or even or maybe even remember it. But yeah, part of my main focus on even not just exchanges but coins is, are we gonna get a black swan as a result of what happens to that coin? Are they trying to be regulated? Are they trying to play by the rules? Because there are some exchanges out there that don't give a crap about the rules. Bybit being one of the huge ones that does not care whatsoever. Now, I do use Bybit, don't get me wrong, I use them, but I've always been more than aware of the risks of using them. First of all, the UK don't allow for crypto derivatives. I've got traditional market platforms that I use. They used to have derivatives for crypto on there. They all got rid of them as soon as the UK said, we don't want this anymore. They towed the line immediately. The next day, gone. Other platforms didn't care. They continue to perform outside of the rule book. Binance towed the line eventually. They got round to it and they said, that's fine. If that's what the UK wish, that's what the UK will get. And obviously that's a big chunk of money lost for Binance, but they did it because they want to and are consciously trying to play by the rule book. They want to stand the test of time. As far as I can see, there is no other exchange that have done that. They're the only ones that have done that. Obviously, SwissBorg and Coinbase and Crypto.com don't have derivative products on there anyway. They've got a different platform, that a different approach to how they operate their platforms. So just think about that for a moment. I know from the UK's perspective, it's quite easy because we've been, obviously I trade in the UK, so I follow these things and I've watched them unfold or not unfold. And so you do have to think quite skeptically about where you want to hold your money at this stage now. And it's not for me to tell you exactly where you do it, but I can tell you where I do mine. And trust is a fickle word in this industry. But yeah, I've decided, I'm not going to be wanting to trade too much derivatives anyway. So I've transferred my money out of Bybit now, and I've put it into cold storage or into SwissBorg, where I'm pretty confident that nothing's going to happen to him, and I can stake whatever I've got. And so there won't be any derivatives from me outside of a little tiny bit that I've got for my Screw It derivatives account on Bityard. So I'm expecting further dominoes to fall, basically, and it's not in the places that might be highlighted on Twitter. Like, I don't know, people are still talking about KuCoin, which is obviously a risk because they still don't seem to care too much about the rules and regulations, but things like Bybit are the bigger issue. So I would be sitting back and watching and waiting for the next domino to fall, to be honest with you, which is obviously going to cause bigger, redder candles. And Bybit is a big one. It is a big one. Now they might be too big to fail, but I don't think that's possible in crypto. I definitely don't trust them, to be honest with you. So my money's out of Bybit now, and that's not spreading FUD or anything like that. It's just thinking about it realistically. Right now, I wouldn't want to be caught short in an exchange that I know is not doing things correctly, and I've moved them into SwissBorg basically, which I can pretty much feel that's probably the place I'm most confident that they are playing it by the rule book. They're not exposed to leveraged margin derivatives, any of that. It's basically buy, hold, stake, and if you have a look at their business model, they've been clear from the outset that they don't operate in the same way that FTX has now been caught doing, and Celsius in 3 hours. They don't do that sort of thing. So I'm pretty confident about SwissBorg. So my Bybit money has now got into SwissBorg. Leave that be. But I am expecting further downside, like I say on this chart. So CPI coming through today. Bit of a problem for traditional markets. Dixie's already responding appropriately. If we turn on the indicators here, we can see that we're getting a bounce on the 20 weekly, which is fine. We expected a bounce on the 10. We got that. We broke down. We also expected a response on the 20. We've got that. Moving up. Fine. My expectation generally is that we do approach and finally get our major bounce on the 50 exponential moving average. It's also highlighted by the bottom of the Bollinger Band here on the weekly. And again, you know, this doesn't have to happen, but this is the top target, or the lowest target really on the chart, where I would be looking for a turnaround on this to maybe move all the way back up to where it came from. That could happen here, and the CPI would help that. But I'm still in favour of this further downside continuing, but today is probably not the day to do it. We'll have to wait and see what the CPI says, and the CPI will help us negotiate resistance of 10 exponential and support of 20. So, with all of this said, long story short, in summary, expect further downside for crypto, because crypto is extremely weak. We didn't reclaim those areas that we were looking for on the weekly. The 20 weekly was where we were getting excited for, to expect further continuation. The trend failed, the buy the dip in the box failed, so now the trend continues to the downside, and we should expect mostly continuation to the downside on the weekly. Looking for major capitulation. This giant red candle here on the volume profile, we should expect that to soon dwarf all the others in the past, and that in the past has helped us find major lows, and so we could think about in terms of that. So we've got this big capitulation crash dump over here, big red one, the biggest one at the time. We also had at the time this one, which is the capitulation over here, which was the biggest one at the time. And one other thing that's interesting in this is that we've highlighted this for months now, since the summer. One thing to look for will be a money flow index read of bullish divergence. So we had a low formed over here at around that 6,600. We got the capitulation crash all the way down to, was it 3,200? And higher low. We had the same thing over here. We're dancing around the $7,000 zone. That's fine. A low formed here, a high low formed here on the March crash, all the way down to 4,000. So this is a very pronounced situation here right now. So we can see that an extreme low was formed on the money flow index, and it's going to take a lot for this to make a new low on this. It can happen, obviously, but it hasn't happened, and it's very far away from happening right now. So I say, the sky's the limit. The low is the limit. This is where we are right now. We can bring this money flow index all the way down to even outside of the comfort zone below 20 over here, and still have bullish divergence, and that'll help us negotiate where a low could potentially get set in. We still actually have bullish divergence on the weekly RSI, which is something we never had in the last bear markets. So there is hope for lows to be formed in the normal standard capitulation way, which is bullish divergence, money flow index, and significant low, mid 80% from the top to the bottom. But with all of that said, and like I said about the exchanges, who's next? What's next? Because if it's something like Bybit, they're huge, right? They are huge. It could be KuCoin. I don't know if it's going to be, but it could be. They seem to be saying that everything's fine, but that's what FTX said, wasn't it? It's everything's fine. Everything's fine. So, like I say, just be careful what it is that you do with your cash and where you're keeping it. Try to choose the more reputable and the ones who are open and transparent about their regulations. And there's not many of them that I can really highlight for you. I do like Binance, but I can't vouch for it. I can more or less vouch for SwissBorg, and Coinbase I would trust to a large extent, but who the hell knows at this stage now. I'd be looking for the platforms which don't dice and dabble with margin futures derivatives. If you're looking to store giant sums of money on there, or just keep it safe in a cold wallet, whether it's a ledger or just a safe cold wallet to which you are completely in control of the keys and you're fluent with the way that operates. Because again, when it comes to self-sovereignty with crypto, it's a beautiful thing, but it can get pretty ugly if you're not responsible enough to look after your cash and your private keys. So just respect all of that. Is all part of what you're going to do next. Now, it's not for me to suggest anything to you, but I can just tell you what I've done, and it's always been the same. I've got the only difference is that I've moved my money out of derivatives exchanges now, and the funds from Bybit, which were significant, and now sitting in SwissBorg, just hiding really in I suppose like an air raid shelter, a crypto air raid shelter for waiting for the next thing, bomb to hit, which is in my opinion, I think it's quite likely, to be honest. It's quite likely after what's happened recently. The knock-on effects of the one of the world's biggest exchanges going to zero is a problem. And so we should expect further problems as far as black swans are concerned. You know, this is probably just the start of it. But based on the TA and the charts, 12,000 we can highlight as a major area, just dipping our toes below 12,000 and see if that even holds from there. There is a chance that 7,000 or 8,000 gets tagged. You can't rule it out. But yeah, we'll leave the chart to do its thing right now. No point in getting particularly clever. And for me, I'm not going to even bother trying to do futures on this one. I tried a little bit of it last night. It didn't work out. I wasn't in the right frame of mind anyway. It was just a little screw it money try. But I think what we should be focused on now is allowing for this to perform its full-on retrace wherever it goes. And then we can monitor the situation as we did, or as I did in the last bear market, waiting for signs of life to re-emerge. Anyway, I'll leave it with you there. Thank you for watching. I hope you stay safe. Don't get too upset about what's going on. Lower prices are in many ways, a blessing. It's nice to have had this in a way on my birthday to see that we might be finally capitulating down to extortionate lows. That's fine, but I don't think this is it. I think if we come down this far, I think we've still got further to go. And with that in mind, we should just sit back and allow it to happen. No point in trying to get too clever around this. But as far as traditional markets are concerned, outside of the CPI print, the Everything Bounce 2.0 is still in play. And so we should get excited. Unless, of course, Coinbase is one of your focuses. Anything that's tied to crypto right now is going to be suffering, which is unfortunate. Anyway, thanks for watching. Hope you have a nice day. Take it easy.